In a world racing to decarbonize, the materials underneath the tech matter more than ever. Today, we dive into Australian Strategic Materials, a company aiming to build a rare earths supply chain alternative to China. Welcome to my channel, GOK Investor. In this video, we explore ASMMF/ASM, its assets, strategy, challenges, and why it may matter for investors in the clean tech transition. We are entering a pivotal decade. The shift to electrification, renewable energy, electronics, 5G, and defense systems heavily depends on specialty metals, especially rare earths, neodymium, dysprosium, zirconium, niobium, hafnium, and more. Yet supply is heavily dominated by China, which currently controls much of the refining and magnet manufacturing chain. This concentration poses geopolitical, trade, and security risks. That's where companies like Australian Strategic Materials aim to step in. They want to build an integrated mine-to-metal supply path outside China.
Australian Strategic Materials, formerly known as Australian Zirconia Holdings, rebranded in 2020 to reflect its Strategic Materials ambition. It is listed on the Australian Securities Exchange as ASM and trades OTC in the U.S. under ASMMF. The company pursues a vertically integrated model: mine, process, metal/alloy production, to customer offtake. Its core is the Dubbo Project in New South Wales, hosting rare earth elements, both light and heavy, zirconium, niobium, hafnium, etc. Beyond Australia, it also operates a metals/alloy processing plant in Ochang, South Korea, producing high-purity rare earth metals and alloys.
In its May 2025 investor presentation, ASM highlighted a widening supply deficit in rare earth magnet materials starting circa 2026. They estimate that China currently dominates roughly 63% of rare earth mining, about 85% of separation/refining, about 90% of metal refining, and about 92% of magnet manufacturing globally. This level of concentration means that any export controls, trade disputes, or policy shifts in China can ripple dramatically across global supply chains. In April 2025, China imposed tighter export restrictions on several rare earth elements, triggering supply concerns. This has accelerated interest in alternative producers outside China. In that environment, ASM's Korean metals plant, which is one of the few non-Chinese commercial rare earth production facilities, becomes strategically important. ASM has received increased inquiries and orders from global customers for rare earth metals and alloys, like neodymium, praseodymium, and NdFeB, to reduce reliance on Chinese supply. For example, they have announced purchase orders from U.S. companies Novion Magnetics and Vacuum Schmelze, which is part of the ARA Partners portfolio. What sets ASM apart is its ambition to control the full value chain, not just mining, but downstream processing into metals and alloys. This helps them capture more value, de-risk supply dependency, and deliver higher margins if scale is achieved. The downside, it's capital-intensive, technically complex, and subject to metallurgical and engineering risks. To strengthen their balance sheet, ASM has recently conducted capital raises, placement, and share purchase plan to fund development, and has refined its strategy via heap leach test work, scoping studies, etc. In their Q2 2025 report, they raised $11.86 million in an oversubscribed SPP. Target was $3 million. They also completed an institutional placement, raising $13 million. Together, that gives them financial cushion to advance their flagship projects. The Dubbo Project is the foundation of ASM's strategy. Located in central western New South Wales, it hosts multiple valuable elements: light and heavy rare earths, zirconium, niobium, and hafnium. The project already has key approvals in place, and ASM is advancing the design, metallurgical test work, and flow sheet studies to move toward a final investment decision, FID. A recent development is the heap leach scoping study, which offers a lower-cost processing route for some components. ASM had earlier held an option agreement to earn into the Mount Squires Rare Earths project in Western Australia, but in May 2025 they decided not to proceed after metallurgical test work results. The company says the termination was a strategic decision, enabling them to concentrate on core assets like Dubbo.
So, is ASMMF, ASM, a compelling opportunity? Here's a balanced take. Why it's interesting? Unique vertical integration, early commercial orders, capital backing, geopolitical tailwinds, and scarcity of non-Chinese rare earth producers. Why cautious? Technical/scale risk, dilution, regulatory ESG risks, and execution challenges. Overall, it may suit risk-tolerant investors focused on long-term exposure to critical materials, and those willing to ride volatility in pursuit of outsized upside. For those interested, key monitoring points are cash runway, metallurgical performance, customer offtakes, and progress toward FID. If you'd like to dig deeper, start with ASM's latest quarterly reports, its May 2025 investor slide deck, and ASX announcements. Also review independent research, global rare earth market analyses, and peer comparisons. If you found this analysis helpful, hit like, subscribe, and ring the bell for more deep dives into strategic materials and emerging tech stocks. Let me know your thoughts or questions about ASMMF in the comments below.